in order to get this number, okay, book value of equipment equals this minus this. And in their case, they are going to end up with the gain. So therefore, they're going to actually, no, they're going to end up with the loss. Their loss is, so, lacked commercial substance, some cash received. Oh, come on. I have to use a, okay. The cash. Oh, gotta be kidding me. How do you do this? Oh. Okay. The basis of the new machine. So you could use the calculation of the gain. How about you not? Never mind. It's much easier just to do the calculation of the gain. Total gain? You have to figure out the total gain first anyways. Okay, total gain. First, you need the fair value of the machine that you gave up. Do I have that? Yes. How about the book value of the machine given up? Yeah, I already calculated that. So total gain for Vaughn. Wait just a second. They didn't get a gain. They have a loss, you stupid moron. This is completely useless. They have a loss. So it's not the gain, it's a loss. I mean, they should end up with the loss. I just assumed that this company didn't have a gain or a loss because there's only 4 boxes, so that was funny. Or I mean, I assumed this company had a gain. Wait just a minute. Wait just a second. They didn't receive the cash. That's the key. That's the key. That's the key. They gave cash, they did not receive cash. Loss. It's the same either way. It doesn't matter if it lacks commercial substance. It's the same, regardless of what you do. The cash payment due, the cost of the machine is the cash payment. They didn't pay any cash. They didn't pay a cash. That was funny. They received cash. Are you kidding me? How? Come on. What the heck? Why? Why? No. Jared gives information processing. Information processing trades new machine, made its used machine for a new model. They also gave a cash payment. No, the other guy gave you a cash payment. You received cash, and at the same time you still incurred a loss? Wait, how does that work? How does that even work? Wait. Why don't they show what Jared Business records? Did they get a gain? Okay, let's just see if they actually did get a gain. Because all you have to do to calculate if there's a gain they specify that this lacks commercial substance. You know what's gonna be funny? Wait, never mind. Dude, imagine if they just put that as a red herring and they're like, no, there's actually not 5 boxes. You only need 4. We just put that there to confuse students and make them kill themselves. That was funny. Okay, I calculated the book value. The difference between the book value and the fair value plus cash equals whether it's a gain or a loss. They gave that 9,000. They paid 19,800 because that's the book value of their equipment. No, is it the fair value or the book value? You've gotta be kidding. No. The difference between... Oh, gotta be kidding. You have gotta be kidding. That was funny. The cost for that company was $13,000 because they paid $9,900 plus their cash. But I don't know if you include fair value or not. I mean, clearly there's only 5 boxes in that question, so I mean 4 boxes. It's not fair. This is not fair. This is not fair. They paid cash, and they also have fair value of their old machine included. Yeah, but look at this. Here's the only problem. Okay, the fair value of their equipment was $13,750. The cash given up was $3,300. They received a 17,050. According to that, there would be no gain or loss because they traded something that was worth this much fair value for this much fair value, but they also gave this much money, which made it equal. So therefore, there would be no gain or loss. There's no gain or loss, but there's an extra box here, so that would imply that... Oh, come on. Why? Just why? They had to give you a problem that is not analogous to the examples. They just had to do that. I've been doing this for 2.5 hours. I've been doing this assessment for 2.5 hours. You know what's the sign of a good curriculum? I actually got 100% in my Calculus 3 class. Putting in the same amount or even less effort than I am putting in for all of these classes. And the reason is because they actually fully explained how to do every problem. In this one, they don't explain how to do every problem. So you get a bunch of problems wrong because you just have to guess how to do the problem, and you're probably going to not guess correctly all the time, so I'm going to put accumulated depreciation because at least I know how to do that. Jeez. 11,000. I mean, there's probably going to be a gain or a loss in this part. You would think, at least. They didn't receive cash. They received cash. They received cash. The cost of their old equipment was $30,800. They received cash. Their cash account will increase. Dude, what if you put this out of order? I don't care. Dude, what if they're like, no, it's out of order, so you're not doing it right. Shut up. What? Stop. They received cash of 3300. So book value, the computation for the cost involves the book value, because you have accumulated depreciation. You have your cost of your old one there. You have accumulated depreciation. So I'm assuming there's going to be a gain or a loss. So basically, their fair value is this. There's no gain or loss. How does this make any sense? Okay, I think what they're trying to say is they have a gain. Yeah, but if they have a gain, that means the other company has a loss, but they don't allow you enough boxes to account for the loss. So that doesn't make sense. That implies this company has a gain. If this company has a gain that's deferred, then this company has a loss. This company has a loss. How do you get to the loss? How did they record the amount of the equipment that they got? Well, they include the cash payment due plus the fair value. So does that mean you do fair value minus the cash to get your equipment? Equals the fair value of yours. Wait, hold on. The fair value of the one you traded in, yes. Minus the cash that you received. How does that make any sense? You subtract cash? Well, yeah, because they're okay, so 13,750. That just gives you the fair value of the other equipment. And the book value of their equipment is this, which means what? Okay, 13,750. 13. The reason this is different from this is because they're not accounting for the gain. They're not accounting for the fact that they received a gain. They're deferring the gain till later. This company has a loss. I'm gonna make it so both sides of the equation are equal. This company has a loss, probably. Loss on disposal of equipment. So all I have to do is get these two things to be equal. All I have to do is this minus this minus this minus this, and I should have it. I'm just going to do it on my phone. I should have just done this before when I'm just doing random calculations. Yeah, this is a really stupid way to calculate it, but I don't even know how to do it any other way. So 2,750. If you add 2,750 to this, you would get 13, or you would get 15. What? How does that work? That doesn't make sense. Their loss is the other person's gain. How does that make sense? That makes no sense. I'm just going to see what... Oh my gosh. I got almost everything right except for this. How on earth could this possibly be wrong? I wonder if they're just like, oh, it has to be switched. So you did it in the wrong order. Dude, that literally might be it. That literally might just be the reason why they say this is wrong. So I am simply going to switch them. That's it. That's all I'm going to do is switch them. I'm going to put equipment for... Okay, so I'm going to switch 30,800 to here. And then switch 2750 to here. And then I'm going to switch equipment to down here and loss on disposal of equipment. So loss on disposal of equipment and equipment. So the only thing I did was switch the ordering of the accounts. That's all I switched, because they maybe, in fact, I am wrong, but I don't see how I could possibly be wrong on the whoops. Oh, I messed up. Okay, you know what? No, this 2750 is up here, and 3800. Okay, there, now it should be right. Why? Maybe it is, in fact, not a loss, but it is a loss. The equipment one is for sure correct. The equipment one is so right. How could it not be right? They got rid of their old equipment with the book value of $30,800. How is that not right? Dude, the only reason they marked it wrong was because... Wait, no. There's a second part to the question. That's hilarious. That was such a pain, and now I have to do it. I'm not even done with the question because I have to do part B. Isn't that great? Dude, it took me so long to do that. What? Can I listen? Okay. Can I please listen to the song 5 billion times? Never mind, stop. You can shut up now. It took 5 jillion years to do that. Funny. The Vaughn Company's entry is going to be exactly the same. It's going to be exactly the same. Everything is the same. Equipment, accumulated depreciation equipment, loss, like, wait, hold on. No, for some reason they love the order that they put it in originally. Cash. I don't know why they have to have a specific order. Loss on disposal of equipment. And equipment. Literally the entire entry is exactly the same for this company. So I just copy and paste everything. Equipment is 13,750. Accumulated depreciation is 11,000. Cash is 3300. Loss on disposal of equipment is 2750. Equipment 3,800. Now, there's a little bit of change for this entry for the other company, but it's not all different. So we have equipment, accumulated depreciation, and then now they're going to have a gain right here, gain on disposal of equipment, which, so, and then it's going to be equipment and cash. And some things will be the same and some things will be different. The equipment will be exactly the same as before. It will just be 30,800. The cash will be the same. It's 3300. The accumulated depreciation will be the same. It will be 20,900. The only thing that's different is the gain on disposal in the equipment. So, I believe all I have to do is add 2,750 to both, to this and this. Is that all I have to do? Maybe not. Maybe not. I don't know. No, I believe no. No. Yes. Has commercial substance. Gain has commercial substance. The gain is the fair value. Wait, hold on. Okay, the gain is the difference between the fair value of what they received. Hold on. Hold on. Hold on a second. No. The cash is not included in the computation. The cash is not included. Maybe that's what I was mistaking over here. The reason that there's a gain, the difference between 9,900. No, that doesn't make any sense. The book value. So the Tamarisk realized the gain. Vaughn realized the loss. They have a loss because the fair value differs. Wait. The difference between this and this is not. Ah, crap. I hate myself. That was funny. Okay, this part is like, I don't know why I like this part a lot for some reason. You know how he's able to combine two melodies together that don't sound very good? They sound dissonant combined, but he makes it sound good anyways. It's because of volume mixing. That was funny. I hate myself. I mean, sound mixes. I'm going to try to conceptually understand the fact that there's a loss. How do you calculate a loss? Oh, that was funny. The difference between the fair value and the book value of what? What is this? Okay, so you have your used trucks. The book value of your truck is that. So therefore, there's a gain. However, the one that you gave away, Vaughn gave away this. What's the difference between this and this? Wait, no. This and this. The difference between this and this is... Oh, here we go. Watch this. I should get the exact same number I got before. I should get it. Yes, I got the right number. See, look. That's so simple. All you do is look at your equipment that you gave away. Look at the equipment you gave away. Okay. Gain. Tamarisk. The equipment you gave away, fair value, minus the book value of your equipment. That's the gain. How is it different? It should be the same for both. Vaughn should have a loss and Tamarisk should have a gain. How does this make any sense? How does this make sense? Did I use the right numbers? The fair value of their equipment is this. The book value of their equipment is this. The difference is $3,850. So don't you just add that to the equipment and you add that to the gain? And by the way, the gain is going to actually be a credit. Don't you just add the gain to the equipment and you add the gain to the gain? I'm going to look and make sure. See the fair value of the one you gave away. The book value of the one you gave away. The gain. So I don't, okay, there's some random reason I'm not getting why the gain for Tamarisk is more than the loss for Vaughn. I guess, so that means all you have to do, the cost is going to be the fair value plus the cash. Wait. Fair value of the new truck. The fair value of the ones you gave up plus the cash you paid equals the cost. This plus this. The fair value of the one you gave up plus the cash you paid, $17,050, which is this. Are you freaking serious? Well, that makes... Gain is 3,850. And basically you added 3,850 to this to get this number. No, you didn't. Wait. No. Logically speaking, all you would have to do to change this is to have a gain, add 3,850 to that number, and you would get your number. Right? It 3,200 plus 3,850, because that's the gain. That's the only difference between the two. Yeah, that's 17,050, so that makes sense. The idea that the gain of this company is the same as the loss of this company is apparently not right. So... Okay, this is not even an accurate estimate of how long it took. I don't even know what the actual length of time is. Man, this is taking so long. And watch as we're not going to be able to study this. I need to be able to study from this. I cannot. I have to be able to study from this, please. Man. Because of how hard this is. I hate that. Why does it do that? Man, thank goodness for an easy question. Improvement is capitalized. Not capitalized. Capitalized. Expenditure that increases the efficiency and effectiveness. It increases the efficiency and effectiveness of it, so it's capitalized. You would think. Like, as long as it increases the efficiency and effectiveness, it should be capitalized, you would think. Quality of output, capitalized. It increased, like, ordinary repairs are expensed. See, look, I was right. Look how little time that took. It only took 57 seconds. That's got to be a record. What the heck? Man, why does our professor not know how to fix this thing where it doesn't? It always closes the quiz. I need this to be fixed. Because some of this stuff is just too hard to just glean from the textbook. Because their textbook is terrible, so... This is pretty simple stuff. We've already done this several times. So we need to record some depreciation for September what? I'm just gonna use a calculator to calculate depreciation. Let's see here. There's gonna be 3,200, so 3,216 times how many months of depreciation has occurred? September is the 9th month of the year, therefore 8 months. So 8 divided by 12, and you should end up with 2,144. There. So, your total depreciation should end up being 11,256 plus 2,144 and that would be 13,400. You sold the machine, so you received cash of 14,070. The original. Where do you record the? Probably up there. Equipment is gonna be 26,800, and there's gonna be a gain or loss. So the difference between what you received in cash and the book value is the gain or loss, right? No, it's not, you moronic. Okay, just the easiest way to get this is, I know it's not, I'm just going to do this minus this minus this. Wait, no, that's not how it works. We just want both sides to be equal. Okay, 14,070 plus 13,400. So minus, so that means we need to add something to this side. And since we're adding a credit, that means it's a gain. So minus 26,800. So 670 is the gain. And come on. Oh, I'm an idiot. It's machinery, not equipment. There. I've just been writing equipment every single time, but it's not always equipment. That question only took me 4 minutes. Dude, why did I seriously have to miss such a large portion? It was literally half of this question I could not even get right. Come on. Seriously? Like, this one was so hard. You gotta be kidding me. We only have one more. Oh, man. I just realized I also have to do the other part of the other assignment, which was the thing, but usually that doesn't take very long. Well, that's hilarious. Yeah. That was fun. Please be easy. Dang it! You've got to be kidding. There's literally part A, B, and C, and part A is like 1,000,000 miles long. Oh. What? Oh, man. What is this? What is this? Is this like some random thing? The disposal of property? Sale, involuntary conversion, miscellaneous problems. So it's probably... Oh! Dude! I found it. I found the contribution revenue thing. It's right here. It's right here. Yes, it was in the appendix. Yeah, like I was supposed to know it was going to be in the appendix. They already recorded all of its depreciation that they need because it's at the end of the year. Oh, come on. Okay, wait. Dude. Yes, record current depreciation. Okay, so yeah. Yeah, that's a... You know what's hilarious? If you forgot everything from financial accounting, you would be completely screwed for this class. Or would you? Maybe not. But maybe if you read chapter 3, you'd be fine. Like if you read chapters 1 through 3, or if you read like chapter 3, which we for some random reason skipped. You know, that's really interesting to me. Why we skipped chapter 3? Because chapter 3 actually contained information that was like crucial financial accounting information. Now, it says it's the accounting information system, but weirdly enough, no. The way they label the chapter is completely stupid. Because they actually have like, look at this. They literally review debits and credits in this chapter? What? Are you kidding me? That's like the most basic, that's like the most fundamental thing you need to learn from accounting, and yet they put it in this chapter that's called Accounting Information Systems, and that made the professor think that it's an unnecessary chapter. No way. No way. They have the whole discussion of debits versus credits in this chapter for no apparent reason. Wow. Dude. Wow. And they have a bunch of examples of different transactions and how they're recorded in terms of assets, liabilities, and stockholders' equity. Like, it's the most fundamental things you could possibly learn. The accounting cycle, I don't know, that one's not as much. That was funny. Journaling. They go over the whole concept of journaling in chapter 3. Like, all of this stuff. Why couldn't we have covered this chapter? This is like a complete review of financial accounting here. And yet we didn't go over this chapter. We went over chapter 1 and 2 of all chapters. I think our professor just did not read the chapter. I don't think he read the chapters. He just assumed what was in them. But no, the textbook stupidly titled this the Accounting Information System. I guess that makes sense. It's just like, maybe he thought, I don't know why he thought this was unnecessary. What? This is like a review of all the basic concepts that we learned. Is it recording time right now on this? It better not. That was funny. They have your basic, you have journalizing, you have posting. It's like, this is kind of important stuff that we skipped over. Also, we skipped over chapter 5 and 6 for some reason. I'm not sure why. Like, I wonder why he chose these specific chapters. That was funny. That was funny. That was funny. That was funny. The way I said that was funny was funny. Machine. Wait. No. $78,000 per year. It was destroyed on August 31st, so the first 8 months of depreciation for the year. So 78,000 times, it was 8 months. 8 divided by 12, so 52,000. Second, you lost the machine. So, first of all, you received cash of insurance, $559,000. The insurance settlement of cash, and then, well, let's just see, involuntary conversion. Get rid of the accumulated depreciation. And of course I'm going to have to add the thing. 52,000 plus this. $468,000. So 520,000. And then the original cost of the machine was 1,690,000, and then we're just going to do this. Well, is there a loss or a gain? Well, it says loss, so well. Oh, that was funny. We want to make these two sides of the equations balance. I don't even care. Okay, anyways. 1,690,000 minus, I'm doing it the correct way. Subtract accumulated depreciation, 520,000. The book value of the machine is 1.7 million. You only received that much cash, therefore you have a loss. Minus 559,000, 11000 loss and disposal. That was A. We got all of it right for A. Oh no, oh I thought there were no timestamps. I don't know what this is. What happened with Dan Snyder? That's fun. There's nothing new here. He's under federal investigation. Maybe that's what it is. Okay. Yeah, this Mariah Shrine site. He must have requested they remove all the music from that website. They removed the music, but they kept pirated versions of the game on the site, apparently. He thinks number 10 is the worst. Oh, wait, never mind. 10 Desires is number 13, I think. I guess I'm not too surprised by that. That was funny. Anybody? Anybody? They sold a machine to a company. Funny. Record depreciation. It's so annoying to always have to adjust the depreciation stuff. Three months. No, it's times 3 divided by 12. 19,500. Cash. 1352. That was funny, you sniffed. You add this to the depreciation that was already there. 468,000. 487,500. Oh. Is there a gain or a loss? I'm just gonna try to balance both sides of the equation. I can't be bothered. Actually, 487,500. So the book value is this, and then the value that you received was that. So there's a gain of gain of 149,500. Time to do this again. There is a total of 7 months of depreciation. $45,500. They didn't receive cash, or they didn't receive a single bit of anything. Contribution expense would probably be what we're looking for, right? You know, I can just click. Do you just reduce the accumulated depreciation first? I bet it's going to be out of order. No, this is not the right order for it to do it. Add the depreciation to it. $513,500. I'm so confused. There should be only 3 things. No? Idiot. This is when they donated land. I'm so confused. Where do you put the fair value? You just wrote your machine off the books just now by doing this. Your contribution expense.